3 years. That's how long average Kenyan businesses stays on using the wrong software after they have already decided to change it. Not because they do not know that what they need, but because migration sounds like the kind of a project where something breaks and nobody can raise an invoice for more than 2 weeks. But if you're watching this video, you've already made the decision. You're not here because you're convinced to switch. You're here because you want to switch without breaking anything you've built. Good. This video is exactly what we are doing today, because migration done properly does not break your books. It does not lose your record. It does not take your business offline. Those things only happen when nobody manages the process. This video is the process. QuickBooks or Tally to ERPNext in Kenya, and this video is a step-by-step. Let's go. First, let us be clear about what migration actually means. You're not copying your old system into a new shell. You're moving your structured business data into a platform that organizes it differently. Here is what migrates cleanly: your charts of account, your customer and supplier records, your item list, your opening balances as of cutoff date, and your open invoice and bills that have not yet been paid. And here is what does not migrate: closed historical transaction, bank reconciliation history, payroll transaction history line by line. This stays in your old system, which remain accessible in only read mode as long as you need it. The reason as to why we do not migrate historical transaction, it's not because our ERP cannot handle it. It's because doing so adds months to the projects for zero operational benefits. Your closed transactions are already done. They are not changing. Keep them on the old system just for reference. For clean migration to occur, these are the 7 steps that we do follow. Step 1. Audit your data. Before you export anything, you review what you have. Check your bank accounts are reconciled to the actual statement. Check for duplicate customer or supplier records. Check your stock quantities against your physical count. Check that your trial balance is in balance with no unexplained differences. Issues found on the audit must be fixed before you export your data. The data going into our ERP or ERPNext is only as clean as the data coming out of your old system. Step 2 is cleaning your data, and this is the most important step in the entire process. Businesses that skip it tend to import their old problems into the new system. For this, what you need to do is merge duplicate records, standardize items names, write off genuinely irrecoverable debts, add missing KRA pins to supplier records, deactivate obsolete accounts, and reconcile every bank account to the real statement before you cut off date. Do not rush this step. Step 3. Exportation time. From QuickBooks Online, use the accounting, reports, and list menu to export your charts of account, customer list, supplier list, item list, open invoices report, and trial balance report. Each has its own CSV or Excel file. Now, from Tally Prime, use the display and export functions under the gateway of Tally to export ledger master, stock items, outstanding transaction. XML or Excel format both works. Choose your cutoff dates carefully. For the first day of the month is the cleanest. The first day of the new financial year is even better still. Step 4, which is mapping. You see, ERPNext uses specific import templates for each data type. Every column in your export needs to map to the correct column in ERPNext template. This is where you convert your QuickBooks or Tally Prime accounts type to ERPNext account type. Assign item groups, standardize unit of measure, and check that every customer and supplier has the correct currency assigned to them. At ITKenya, we provide pre-formatted templates built specifically for Kenyan markets, including the Kenyan specific field that generic ERPNext templates do not have. Step 5, it's the configuration, and this step must happen before you import anything. KRA e-teams must be connected and tested before your first live invoice. Your Safaricom Daraja API credential must be configured so M-Pesa payment auto-reconcile from day one. Your statutory payroll rates, payee, NSSF, NHIF, housing levy, and even HELB must be set up before you run your first payroll. Your company KRA PIN and registered name must be in the system so that they appear correctly on all e-team invoices. Configure first, import second, every time. Step 6, import and order matters a lot. For this to happen correctly and swiftly, every step in this must happen in a sequence format. You start with charts of account first, then the customer and supplies, then items, then open accounts and balance, then opening stock, opening invoices and bills, and finally you import the employee records. You cannot import the customer before the accounts exist. You cannot import opening invoices before customers exist. Follow the sequence and validate each import before moving to the next one. The most important validation after importing open invoices, the total must match the accounts receivable balance in your open trial balance exactly. If it does not, find the difference before going further. Step 7, running a parallel software comparison once you go live. For 2 to 4 weeks after your import is complete, you run both systems, enter the same transaction in both, compare your weekly trial balance. If ERPNext matches your old system, then you're ready. Before you cut over, confirm 3 things at least. First is the KRA e-teams invoices has been submitted and returned a physical document number. At least one M-Pesa payment has been received and auto-reconciled in the ERPNext. At least one full payroll has been completed with correct statutory deductions. When those 3 things are confirmed, then you're ready. Your old system can now move to read only, and ERPNext is now your business. Quickly, I want us to look at the 5 common mistakes that derail migration every single time. Number 1 is going live with unreconciled bank accounts. In this, the discrepancies just migrates with you. Number 2 is trying to import all historical transactions instead of opening balances. It adds months for no operational benefits while the transactions are already closed. Number 3 is configuring ERPNext after importing data instead of before. You will have to delete and re-import again when you're doing it. Number 4 is not testing the e-teams and M-Pesa before going live. The one of live operation is not the same time or the time to discover that the integration is broken. 5. Going live before your team is trained. The most technical perfect migration can be undone by a team that does not know how to use the new system. So ensure your team is also trained. Realistically, what's the timeline for a perfect or good migration? For Kenyan SMEs with clean and well-maintained books, the full migration takes between 4 to 6 weeks from kickoff to going live. If your books have unreconciled accounts or significant data quality issue, add 2 to 4 weeks to data cleaning phase. At ITKenya, we include a complete migration process in every implementation package. Data audit, mapping, templates, import assistance, validation, training, and for businesses owners every week. See you in the next one.